Hey everyone, and welcome to Chima Invests. You know that feeling? The one that tells you that you need a mountain of cash just to get in the investing game? Well, it's a super common thought, and honestly, it stops so many people cold. Today, we're going to blow that idea right out of the water.
And look, let's be real for a second. When you hear $1,000, you might even laugh a little. I mean, $1,000, for most of us, that doesn't feel like a starting point for a fortune. It feels like it's already spent before it even hits our bank account.
And you know what? That's not just a feeling you have. It's not in your head. The data actually shows that your money is working overtime just to cover the basics. It puts your finances and, let's be honest, your brain into total survival mode.
Just take a look at these numbers. This is where the money is going. We're talking about 71% of adults paying more for groceries. Utilities? Up. Housing? Up. Healthcare? Gas? These aren't luxuries we're talking about. This is the stuff we absolutely need, and it is squeezing everyone's budget dry.
So what's causing this constant pressure? Well, it's a little thing called inflation. Think of it like an invisible thief that's constantly making your money worth less and less over time. And it's the number one reason why just holding on to your cash is, believe it or not, a losing strategy.
This breaks it down perfectly. You've really got two choices here. On one side, you have cash in the bank. Sure, the number on the screen looks safe, but its actual buying power is getting weaker every single day. On the other side, you've got money at work, where you plant it and give it a real chance to grow. And here's the key. Doing nothing is a decision, and it's a decision that's actively costing you money. Okay, so this brings us to a really important mindset shift. The goal here isn't for $1,000 to magically pay this month's bills. I can't do that. The real goal is to give that $1,000 one specific job, and that job is simply to grow. We're going to stop reacting to costs and start intentionally building for our future.
So how do we actually do that? Well, the first part of our strategy is something called dividend yield. The easiest way to think about this is it's the cash that the investment pays you right now today. It's that little reward you can actually see and feel right from the very beginning, even when your portfolio is still tiny.
The second piece of this puzzle is dividend growth. This isn't just about the cash you get today, it's about how fast those cash payments get bigger over time. And this right here is where the magic really starts to happen. Because as that income grows, you reinvest it, and then your money starts making its own money. That is compounding, and it's a beautiful thing.
And the third and final piece of our growth machine is share price appreciation. All this really means is that the business you invested in is becoming more valuable over time. It's the foundation that everything else is built on. As the company grows, the value of your piece of it grows too.
Now, instead of trying to find that one perfect miracle stock, which is basically impossible, we're going to build a team. We're going to spread the work across 5 different investments. This creates a really balanced portfolio that is built for steady, long-term progress.
All right, here's our starting lineup. Each of these 5 players has a very specific job. We've got SCHD, that's our anchor, solid and steady. Then there's Rexar, our income play. You can see its yield is nice and high, which means it pays out good cash right now. Next up is LO, our growth play. Notice how its dividend growth number is way up there. It's all about increasing those payouts fast. Then we have AGM, our aggressive compounder, which is just an absolute beast when it comes to overall growth. They all have different strengths, and that's what makes the team so strong.
So what's the combined power of this whole team? You'd think you need a complicated spreadsheet, but honestly, the math is super simple. Like this slide shows, you just add up the 5 yields, you divide that by 5, and boom, that's it. We get our average portfolio yield of 3.41%. It's really that easy.
And check this out. When we do that same simple math for our other 2 growth engines, the numbers are just fantastic. I mean, look at this. An average dividend growth rate of over 17% a year. And on top of that, share price appreciation of over 13% a year. These 3 bars, yield, growth, and appreciation, are the engines that are going to power this portfolio's journey.
Okay, so we've built the machine. We know what's under the hood. Now for the big question. What happens when you invest that first $1,000 and just let it go? This is where we see what happens when you let time and compounding do all the heavy lifting for you.
So in year 1, it feels pretty slow. The portfolio kicks off about $30, but stick with it. By year 10, that little $1,000 has turned into about $5,000. Then things really start to accelerate. By year 20, you're looking at around $29,000. And after 30 years, that one investment that felt too small has snowballed into a portfolio worth around $224,000. Just wow.
But what does that huge number actually mean for you?
It means that portfolio is now generating about $1,600 a month, every single month, in passive dividend income. That's a real, life-changing amount of money, all grown from that one single initial investment.
And that's really the heart of it, isn't it? What started as one decision with $1,000 transforms into a real income stream. It's money that can support a part of your life, and it doesn't require you to work a single extra hour or put in any more effort.
And that brings us right to the final takeaway. The results are incredible, of course, but they all depend on one thing. The single most powerful force in investing isn't finding the perfect stock, it's not timing the market, it's just starting. That's it. Little money can in fact do very, very big things, as long as you give it enough time.
Thank you so much for watching Chima Invests. I really hope this showed you the true potential that's packed inside even a small starting amount. Be sure to tune in again soon for more simple and effective money tips.